If your single member LLC pays you an actual paycheck, withholding, payroll service, the works, you're probably spending $500 to $1,000 a year filing payroll forms the IRS never asked you for. Stop. This is one of the most common and most expensive mix-ups we see new business owners make at AAA Tax Prep TN. By the end of this video, you'll know exactly how owners take money out of an LLC based on how your LLC is taxed and the one situation where a paycheck to yourself is actually required. Chapter 1. The one question that decides everything. Here's the thing nobody tells you. LLC is a legal label, not a tax category. The IRS doesn't have an LLC tax return. Instead, your LLC gets classified for taxes, and that classification, not the letters LLC, decides how you pay yourself. There are three common setups. A single member LLC taxed as a sole proprietorship. That's the default. A multi-member LLC taxed as a partnership, also a default, and an LLC that has elected S-corporation taxation. Three different answers. Let's take them one at a time. Chapter 2, Single Member LLC, the owner's draw. If you never filed an election form, your single member LLC is what the IRS calls a disregarded entity. Your business profit lands on Schedule C of your personal return. And here's the part that surprises people. You do not put yourself on payroll. No W-2 to yourself, ever. You pay yourself with an owner's draw, which is just moving money from the business bank account to your personal account. Write a check, send a transfer, done. No withholding, no payroll filing, no payroll service fee. But, and this is the catch that funds a lot of IRS penalty notices, taxes were never taken out of that draw. You owe income tax plus self-employment tax on your business profit, whether you took the cash out or left it in the account. Self-employment tax runs 15.3%, applied to about 92.35% of your net profit. That's Social Security and Medicare, both halves, because you're the employer and the employee now. Important detail, you're taxed on profit, not on draws. Take out nothing all year, still taxed on the profit. Take out more than the profit, you're not taxed twice. You're just spending down the account. Chapter 3. Multi-member LLC. Distributions and guaranteed payments. Two or more owners and no election? You're a partnership. The business files Form 1065, and each owner gets a Schedule K-1 showing their slice of the profit. You take money out as distributions. Same idea as a draw. And again, you're taxed on your share of profit whether you distribute it or not. One extra wrinkle. Guaranteed payments. That's when a partner gets paid a fixed amount for work or capital off the top before profits split. It shows up on the K-1 and it's subject to self-employment tax. If one partner works the business full-time and the other just invested, guaranteed payments are usually how that gets evened up. It's worth getting the operating agreement right here. Chapter 4. The S-corp election, where a paycheck is required. Now the exception that creates all the confusion online. If your LLC files Form 2553 and elects S-corporation taxation, the rules flip. As a working owner, you are now required to pay yourself a reasonable W-2 salary. Real payroll, real withholding, before you take profit distributions. Why would anyone volunteer for payroll? Because only the salary pays Social Security and Medicare tax. The distributions above it don't. For example, $80,000 of profit with a $50,000 reasonable salary means roughly $30,000 escapes that 15.3%. That could be worth several $1,000s a year, depending on your numbers. But two warnings. 1. Reasonable salary is the IRS's favorite S-corp audit target. Pay yourself $12,000 on $200,000 of profit, and you're raising your hand. 2. The election adds real costs. Payroll service, a separate 1120-S business return, state fees. There's a break-even point, usually somewhere around $50,000 to $60,000 of consistent net profit And I've got a full video coming on that exact math. This is genuinely a run your own numbers decision. Many owners switch too early because a video told them to. If you want that S-corp math run on your actual numbers before you decide, that's exactly what a 30-minute consult with our firm is for. The booking link is the first link in the description. Chapter 5, the mechanics, whichever type you are. 4 habits that keep all of this clean. First, separate business bank account, no exceptions. Commingling personal and business money is the fastest way to lose your liability protection and wreck your bookkeeping at the same time. Second, record every draw or distribution in your books as what it is. It's not an expense, it's equity going out. Your profit number doesn't change because you took a draw. Third, set aside taxes from every draw. A separate savings account works. Move 25 to 30% of what you take every time before you spend $1 of it. Your bracket may differ. That's the conversation to have with your tax pro, but 0% is definitely wrong. Fourth, if you're a default LLC, the IRS expects you to send that set-aside money in 4 times a year as quarterly estimated payments. Miss them, and there's an interest charge even if you pay in full in April. I've got a whole video on the quarterly system and the safe harbor rule that makes penalties impossible. It's linked below. Action today. Here's your one move for today. Open your business bank account and look at the last transfer you made to yourself. Can you say right now whether that was a draw, a distribution, or payroll, and whether tax money was set aside from it? If the answer is that's your homework. And if you want a second set of eyes on it, whether your setup is right, whether the S-corp math works for you, that's literally a 30-minute consult with our firm. Booking link is the first link in the description. There's also our 2026 small business tax deduction checklist down there. 23 deductions owners miss, including a tax set-aside worksheet. Quick disclaimer, this is education, not tax advice. Rules change and your situation is unique, so talk to a pro. This video uses an AI voice. Every script is reviewed by a human tax professional. Links below may be affiliate links.